7:37 in the morning. That's a look at your headlines. Here's Mike.
All right, thank you, Sarah. Well, the Dow crossed the 15,000 threshold, retreated just slightly, but the recent market rally plus the recent surprisingly positive jobs report could mean it's time for you to take action. Joining us this morning on Money Tuesday with some advice is Stewart Welch of the Welch Group. Always good to see you.
Good morning, Mike.
First of all, is now a good time to maybe reassess what you're doing in terms of your investment options on your 401k or retirement plans?
Well, Mike, I think it is a good time. It's always a good time.
Sure.
You ought to be constantly looking at it, but the market has had a big run up, and I think some people are maybe afraid of the market now. Maybe they feel like they've missed it, and the long-term answer is I don't know what's going to happen tomorrow or next week or next month, and I think nobody knows that. But the long-term trend, what you're looking at is stocks versus bonds. The long-term trend, the next 3 to 5 years, I think favors stocks over bonds. In fact, there may be a lot of risk associated with bonds because I think in the next 3 to 5 years you're going to see rising interest rates. So I would look back at my 401k, look at my portfolio, maybe do some rebalancing into the stock market, and just realize that the market is probably at some point going to retreat a bit, but the long-term trend over the next 3 to 5 years is very positive for stocks.
And just following up on that, of course we always know there's risk involved. Any sectors or stocks that you like?
Well, I tell you that when you're looking at 3 to 5 years, what I would want to do is have a very broadly diversified portfolio. Okay. And over that period of time, whatever sector's doing well now is probably going to underperform, and whatever sectors are not doing not doing well are going to begin to overperform. So I think a broadly diversified portfolio is a smarter strategy, safer strategy.
Good plan to follow. All right, now let's just say money is good. Maybe you got some extra money in your pocket. Interest rates are very low right now. I know some people have been on the fence about maybe getting a vacation property. Talk about some pros and cons of doing that.
Well, so vacation property, let's just talk about the beach. When 2008 happened, we saw vacation properties in the mountains and at the beach drop as much as 50% or more. And so it looks like that has begun to bottom out. So it's actually an excellent time to buy property at the beach, and also it is an excellent time to finance property because interest rates are at historical lows. Okay. I think the one caution if you're buying beach property would be if you're not going to be able to use it more than about 3 months out of the year, then I would recommend that you're better off financially to actually be a renter rather than an owner. Okay. But some people will say, I'm going to buy it and I'm going to rent it out. And two cautions there. One is that people that want to rent your property probably going to want to rent it at the same time you want to go. Mm-hmm. So that's one negative. And the other negative is that a lot of people think they're going to make money doing that, and I've been doing this for 30 years, and I don't think I've ever seen a case where a rental property has actually been a profit-making venture, so don't expect it to be like that.
There's dues and other maintenance costs involved and all kinds of stuff.
Yeah, and there's when you're renting it out, you're usually paying rental fees, and just the accumulation of expenses just makes it it's going to be a cash drain, and so you want to be prepared for that.
All right, Stewart, thanks for the advice today.
Thanks, Mike.
Got entertainment news coming up. Stick around.